If you've been looking for a no BS guide on fair value gaps, this is it. I'm going to simplify all the stuff that ICT talks about in his mentorship or my boot camp that you didn't really understand the first time. I pretty much use this strategy every single day. So you guys can see in my trade recaps, I'm using this consistently. So let's get into the charts, get ready to lock the fuck in, and let's learn some shit. Alrighty, so first thing that we're gonna do is just talk about fair value gaps. And honestly, I wanna talk about imbalances in general because this is a video that is going to cover a lot of shit that I haven't talked about before on my YouTube channel. You're probably thinking, TJR, another fair value gap video. You've made 8 videos on fair value gaps so far. There's 2 parts, and like the very first time that you were on YouTube, you've made 3 parts on the boot camp, and you made 2 parts on the trading transformation. Well, guess what? There's more. Okay, so I'm going to be talking about imbalances as a whole on top of fair value gaps. We're going to be talking about new day opening gap, new week opening gap, candle gaps, and inverse fair value gaps on top of fair value gaps as a whole. So the first thing that we want to do is understand what imbalances are. It's imbalance price action. And you're probably saying, hey, you can't use the definition of a word that's already in it. Shut up, okay? This is an English class. We're here to learn some shit, okay? So when we think about what does imbalance even mean, it means price isn't balanced out. So what is price likely going to want to do to imbalance price action? Balance it out. Fill in that imbalanced price action. And that's pretty much what all of these imbalances are, right? That's why we call them imbalances, okay? So fair value gaps, candle gaps, new day opening gaps, new week opening gaps, and inverse fair value gaps are unbalanced price action that price is likely going to draw back in towards so that we can form either executions based off of that, daily bias based off of that. And I'm going to show you guys what all of these things are on the chart right now. So first thing that I want to cover is obviously fair value gaps. This is like the most typical one that you guys hear about when you say, oh, there's an imbalance on the chart. Everyone's like just going to assume that it's a fair value gap. Okay, so what does a fair value gap consist of? A fair value gap is a 3 candlestick pattern. I'm going to go ahead and Picasso this shit. It's a 3 candlestick pattern. One candle in the middle that I'm kind of doing this shit off the dome, but I like to call it kind of like the extension candle or the candle that really makes the gap happen. So in order for a fair value gap to be a fair value gap or to have an imbalance, you'll typically see this all the time on the chart. You'll see, hey, in this case, this is a bearish fair value gap. We see that, hey, this wick from the first candle doesn't cover up the top wick on the third candle. And we see that there's a gap between these 2 candlesticks, okay? So we can see that within here, there's a lack of buy orders, okay? Why? Because this candle was able to swiftly move straight through this price range, okay? So now, with that in mind, we know that price was able to swiftly move past this price range and there's a lack of buy orders. So what is price going to want to do to this imbalanced price action? It's going to want to balance it back out, fill in that imbalanced price action, fill more sell orders so price can what? Move further to the downside. Plain and simple, super easy. You guys have seen this all over the place, right? Now, let's show bullish fair value gaps. It's the same exact thing, but just in the other direction. Again, fair value gap, 3 candlestick pattern. You guys have probably seen me explain these so many times, so I'm going to go through fair value gaps a little bit quicker than all the other ones because you guys are pretty familiar with this concept, right? Again, bullish fair value gap, it's a 3 candlestick pattern. How do we know that it's a valid fair value gap? We look at the top wick of the first candle over to the bottom wick of the third candle. Let's say this wick's pubic hair just goes a little bit longer. What's that gonna look like? Is that a fair value gap? Didn't think so. Boom, okay? We need some gap work, like someone's got a big ass gap between their teeth and you can't stop staring at it. That's how you guys should be staring at fair value gaps. We want to balance out that price action. Okay, so boom, we take it from the top wick of the first candle to the bottom wick of the third candle. And don't worry, we're gonna go into the chart and show you guys what this actually looks like on real candlesticks instead of my beautiful paintings of them. And what is price likely going to want to do to this imbalanced price action where there's a lack of sell orders? It's going to cause price to want to push right on down there, balance out price action, fill more buy orders to make price do what? Push up higher. Cool? Cool. Now let's show this on the actual chart. And the awesome thing about this is these show up on every single time frame. So that's the way that I teach my shit. All of my confluences, they show up on every single time frame. They're applicable on every single time frame, okay? So whether you're trading on the 4-hour, the daily, 15-minute, 5-minute, 1-minute, whatever it may be. So without further ado, what do we see right here? Big extension candle, big imbalance of price. So what is price going to want to do? It's going to want to balance out price action. So what do? We take it from the top wick of this first candle up to the bottom wick of this candle, mink, draw that right out, boom. Price balances out price action and price continues higher, right? We see the imbalance get filled. Another example right here. What do we have? Imbalanced price action, big dick of a candle to the upside. Take, boom, from the top wick of the first candle to the bottom wick of the third candle. What does price do? Balance out that price action, continues a little bit higher. Okay, and you're probably saying, well, TJR, what the fuck happened on this bearish fair value gap? Dum-dum, it was supposed to go down lower. Well, that's the thing. Our confluences are nothing without context and bias. So if you guys are having trouble like saying, hey, I take a short on every single bearish fair value gap, all right, let's settle down. You're not trading correctly. Okay, you guys need bias and you guys need context for the trades that you guys are taking. So again, this video is just covering imbalances as a whole, understanding the concept, understanding why we're even able to classify these as confluences in the first place so that we can implement them in our trading. Make sure you guys have a good understanding of how to find daily bias. Make sure you guys have a good understanding of how to execute for just jumping right in and being like, I'm going to take trades off of this. So boom, that's fair value gaps. Now let's go ahead and talk about inverse fair value gaps. We're going to jump right in here and you're probably thinking, what is an inverse fair value gap? Is it the opposite of a fair value gap? Is it when the pubic hairs of the wicks actually touch together? Inverse fair value gap is when we have a fair value gap where we essentially invalidate the fair value gap to the upside. Okay, so here, boom, this is a bullish fair value gap, but what do we see with this next candle? It doesn't necessarily have to be the exact next candle. It can be several candles afterwards. And again, I'll show you guys several examples of this outside of my Picasso painting, but I just want to draw this out for you guys so you guys can have a better view of it. Okay, so boom, we have a bullish fair value gap, and we're expecting for price to do what? To come in here, balance out price action, and see buy orders to the upside and continue up. But then what happens? We get the opposite of that, and price ends up closing underneath the fair value gap. So that turns this into an inverse fair value gap. And how do I treat inverse fair value gaps? I'm not necessarily looking to use these as confluences. I like to call inverse fair value gaps more of like confirmations. So I use inverse fair value gaps super similar to breaks of structure. Again, this is something that can tell me before a break of structure even happens that, hey, our bullish order flow, like in this example, is getting disrupted and isn't getting respected. So in turn, what is that going to make me do? That's going to change my bias of the overall trend within the market. So right here, we have a nice little bearish fair value gap right here, right? We see price, boom, dick and balls pattern straight to the upside, rip work, right? Closing significantly above this fair value gap. Freaking dead on, right? This is like crazy work, edge during pre-market, nut right when market opens. Boom, we close above this. A fair value gap is still valid if we wick to the bottom of it and wick past it. So see right here on this bullish fair value gap, this still gets respected, right? If we closed underneath it, it would turn into an inverse fair value gap. However, it was just a wick to the downside. So we see the price close above here. And also on top of that, it is breaking structure to the upside. But again, we could have treated this if we didn't break structure to the upside, almost as if it was a break of structure to the upside as confirmation. More examples of this will go down into a lower time frame. I've shown several examples of this too on my trade recaps. So if you guys haven't watched those, I highly suggest you do. Let's go ahead and like just draft this up as if we're looking to take a trade. Okay, so here's market open. I remember this day, I was bullish. We had a draw on liquidity right here. Okay, let's scale down even lower time frames. So look, we come down, we sweep liquidity. Okay, let's say we missed all of this, right? We start to see price retracing. Okay, we see a slight retrace. What do we have within here? A bunch of bullish fair value gaps, right? Could have been taking trades off that. Okay, but on top of that, what do we see? We have a bearish fair value gap right here. And if price wanted to continue this retrace, what would have it done? It would have pushed into it. It would have balanced out price action and it would have continued lower. But what did price do? Price closed above this bearish fair value gap and continued bullish price action, and price goes higher and higher. Let's show one more example of this. Boom. Here's a beautiful example right here. We see sweep of liquidity, boom. Break of structure, boom. On top of that, how do we know that right after this candlestick that the overall direction of the trend is going to change until we can take out significant liquidity? By this confirmation right here of this inverse fair value gap. Boom, this is a bullish fair value gap that should have gotten respected and it didn't. We get a closure underneath. Price, what does it do? Seeks out to fill, boom, this imbalance and take out this draw on liquidity, take out this draw on liquidity, and all these other draws on liquidity all the way down here. So boom, inverse fair value gaps, done. Again, if you guys want a more super duper duper in-depth of me like talking out exactly how to draw these things out on the chart, I already got a video on it in the Trading Transformation. Fair value gaps, there's 10 of those bitches by me all over the place. Now we're getting into some shit that I haven't talked about before on this channel, which is new day opening gaps, new week opening gaps, and candle gaps, which is actually pretty exciting. So right here, we'll actually talk about new week opening gap. We'll start off here. Right here is when the week closed. For whatever reason, this week closed on Thursday. My guess is that there was a bank holiday on Friday. Okay, but regardless, boom, this week closes right here. Then what does the new week do? It opens up here. With that in mind, this is a imbalance. What do we know about imbalanced price action? Price is going to want to balance out imbalanced price action. So we know within this price range, this is imbalanced price action. So what can we kind of do? We can kind of treat this as a fair value gap. What do we know about imbalanced price action? Price is going to want to seek out and fill that imbalanced price action damn near immediately. So what do we see price do? We get a little leg up right when the new week opens, and then boom, we immediately draw into that new week opening gap. We can kind of see it as like a draw on liquidity because price really wants to fill in those imbalanced price ranges. Okay, so that's an example of new week opening gap. We can go to the weekly chart and just spot these super easily by just plain and simple seeing where the previous weeks close and where the new weeks open. All of these you will see for a fact is filling these in. So boom, right here, this is where the previous week closed. This is where the new week opened. I don't even have to go into on the chart because we can see the price action through the wick of the candlestick. We can see price at some point in time during this week wanted to fill in this imbalanced price action. We closed right here on the previous week and we opened on this week right here, but we see that little snail trail of the wick that shows that we filled in this imbalanced price action and then price continued up. Again, same thing here. We have this week's close. The next week's open is a little bit higher. We know that this imbalanced price action was filled in purely based on this candle's wick. Another good example, boom, this week's candle close. See, this week, it wanted to be bullish, but what did it have to do? It had to fill in this imbalanced price action. This is something that's super important, that is really beneficial for you guys to keep in mind that barely anybody fucking talks about on the internet, on YouTube. And the same thing applies to days, okay? So again, we can see, shit is like clockwork, bruh. Look at this. This day closes here. This day opens here. What is it going to want to do? Boom, we see a wick to the downside. What did it do? Fill in this imbalanced price action. Same thing right here. Candle close right here. Candle open right here. What is price going to want to do? Fill in the imbalanced price action. Get me? Like, are we starting to understand how every single time we have a different close and a different open, we are typically going to come through and fill in price action, candle close, candle open. What do we do? Fill in the imbalanced price action. Okay, we got it. New day opening gap covered. What are they? They're imbalances. Price is going to want to seek out those imbalances and balance out price action. Now, last but not least, we can talk about candle gaps, okay? And candle gaps are essentially new week opening gaps and new day opening gaps, but just on smaller time frames than the daily and the weekly. So again, it's the same situation. We typically see this happen pretty often on the 1 minute time frame. Do I use these that often? And do I necessarily use like new week opening gap and new day opening gap all the time? Not necessarily, but again, what am I here to do? I'm here to teach you guys how to be good traders. I'm here to teach you guys how to understand price action to its fullest. And I felt like with me only making a video on fair value gaps and me only making a video on inverse fair value gaps, it's doing you guys a disservice because there's other imbalances out there. Okay, so boom, this is a perfect example. Again, it's on the 1 minute and it's hard to like, again, are we likely going to be taking trades off of this? No, but do we want to understand why price moves the way that it does? Absolutely. So we can see this candle closes right here. This candle opens right here. It doesn't immediately just go up. What does it do? Fills in imbalanced price action. Okay, let's find another example. Boom, right here. This candle closes, this candle opens. What does it need to do? Boom, fill in imbalanced price action. Like a broken record at this point. So there you guys have it. Pretty much covered everything there is to imbalances, fair value gaps, inverse fair value gaps, new day opening gap, new week opening gap, and candle gaps. So if you guys really fucked with this video, I'm glad. Thank you guys for trying to mix and match the content, you know, a little bit of like chart work and a little bit of me in front of you guys and the camera, like talking to you guys. So if you guys enjoyed this, drop a fucking like, subscribe. And on top of that, I just filmed a video doing a similar type of filming setting of how I made $6,000 in literally under an hour on how I found my daily bias, how I found the high, you know, like good area price range to look to execute within, and how I executed in order to make that money, in order to hit take profit. So if you guys want to see that video, link will be wherever up here. Go and fucking click that. Okay. And then on top of that, if you guys want to learn all about this shit, you guys can look at the boot camp. You guys can look at the trading transformation, or even better, if you guys don't want to get beamed with ads and shit, I put the best videos from the trading transformation, the boot camp all together into a literally free course. Even though those are already already for free on YouTube, but I know you guys hate giving me money. So boom, I'm going to put it in the description for absolutely free, no ads. I appreciate you guys for watching. Peace out.